Hey everybody, Rob Maurer here, and today we've got a new Tesla Cybertruck sighting. It looks like an updated version, so we'll take a look at that. We've also got updated delivery estimate timelines from Tesla, and a lot of industry-wide news as well. Interesting day for the stock today. Tesla up 3.75%, closing at $188.27, but doesn't really feel like as big of a win as it did in the morning. The Nasdaq actually up 3.25%, so relative to Tesla's beta, a little bit of an underperformance actually, and that is after Tesla was pretty significantly outperforming. In the morning, Tesla at one point up almost 8%. I've seen some attribution for that decline to a tweet from Elon this morning when he again reminded, quote, "In turbulent economic times, be wary of using margin loans to buy stock," end quote. Maybe people taking that as a hint of more bad things to come. That's not how I personally read it. I think it's just Elon, as he has been doing, urging caution even though the markets have recovered a bit. The environment is still very much turbulent, so I think Elon just kind of reiterating what he has said before. I don't view that as containing any new information. Anyway, underperformance for the stock in the afternoon, then we get into after hours, and as I'm recording, Tesla down a couple percent. That movement, more of a reflection of the overall market. We've had a number of different earnings reports this afternoon. We've got Apple, Amazon, Alphabet, the three A's there, I guess, not having AAA performances. Each of those stocks down about 3 to 4%, at least as I'm recording, in after hours after reporting earnings. So I think that's dragging the markets down, dragging Tesla down, and then Ford has also reported earnings after hours. Their stock is down about 6.5% right now. So we'll take a little bit closer of a look at their earnings report later in the episode. All right, getting into Tesla news, we'll start off with an update on the Cybertruck. We heard from Elon Musk earlier this week that he had just reviewed a production beta version of the Cybertruck. Now we've got a new sighting of what may be a production beta Cybertruck from Instagram user Ftrons, though I would note this was in Palo Alto. The production betas would most likely be in Texas, but I suppose Tesla could be testing them in California too. So tough to say, and unfortunately we only get a couple of very brief shots here, one photo and then one very short video clip. Both of which, unfortunately, probably not from the Cybertruck's best angles. But from what we can see here, it does appear to be at least a more recent version of the Cybertruck. There doesn't appear to be any door handle cut-in, which the original prototype had. And then, of course, we can see the side mirrors here as well, which do appear to be a little bit smaller and a little bit more angular, at least from the view that we have, than what we have seen on some of the more recent Cybertruck sightings. Of the overall design, this is probably one of the simplest things for Tesla to change. So even with this update, doesn't necessarily mean the final version will have these exact side mirrors. And as we have heard, Elon has said previously that these should be able to be easily uninstalled. Many states do allow for that, so hopefully Tesla will follow through on that idea. As far as the rest of the vehicle, I'd be pretty careful about taking too much away from images or videos like this because cameras and compression, those can play a pretty big role on how things look. And consistently over the years, pretty much every time we've had a new vehicle on the cusp of coming out, there have been people that have overreacted to things like this, and then we get to the final release and, oh, it looks great. To an extent, the Cybertruck is what it is, but it does look, in my opinion, a lot better in person. I don't think it's ever going to be the most beautiful vehicle from straight behind, but I would just be a little bit careful about overreacting to short little clips like this. I think they're best served to notice minor differences in the design, like we're talking about the mirrors. All right, moving on from the Cybertruck, we've got an update from Tesla on estimated delivery wait times in the design studio, most notably on the long-range Model Y. I believe previously this was listed as February to March in terms of the window, just like the Performance. Tesla now lists that estimate as March to May. Now, these are just estimates. We do tend to see historically pretty wide variances between actual deliveries and these estimates, so it's not a guarantee of this window. But one thing that I do think is interesting to note is that if you do add a color or something similar that pushes the price of the vehicle above the $55,000 price point that the EV tax credit is capped at, the window is still March to May. That doesn't necessarily pull you to the front of the line right away. Again, the estimate isn't the be-all, end-all of anything, and I think it's a mistake to use this for any overly precise calculations, but I think you've got to take that as a pretty positive sign. If we also look at the 7-seat version, which of course bumps the cap up to $80,000 for some reason, that window is now April to June. Interestingly, despite these dates moving out for the long-range Model Y, Tesla's Model Y inventory available on the site has actually increased a little bit. There seems to be an influx of new 4680 Model Ys, so the 269-mile range version that Tesla has just added to the available inventory pages. Many of these, if not all of these, are below the $55,000 cap, so it'll be interesting to see how long those last. I think the value proposition is a little bit less compelling than the long-range version, but if Tesla can get enough orders for the long-range version, they can sell these as a more immediate availability offering, which could kind of end up as a win-win of sorts. Anyway, as for wait times on the other vehicles, Model 3 and Model S both have February to March windows. Interestingly, the Model X a little bit longer, February to April, even though the inventory position and inventory change rate has looked the worst for the Model X, actually a little bit longer window. And if you go to a 6-seat version, that's listed as March to May. So hopefully a more positive sign there for X demand. Finally, on these changes, Alex Potter of Piper Sandler did have a brief note on this today. They have tracked wait time estimates for the Model Y historically, which we can see in this chart. And then within the note itself, I did want to point out kind of the last sentence that they've gotten here. It says, quote, "While gross margin will obviously be impacted by lower prices, we still believe Tesla's peers will bear the brunt of the company's aggressive pricing strategy," end quote. So we've talked a lot about that. It's going to take time to play out, but we'll see what happens. All right, next we've got some new comments from a government official in Mexico on Tesla's possible investment in the country. Bloomberg reporting on the comments from Mexico's Minister of Foreign Affairs, who said that, quote, "What I would think is that we're very close to have this announcement by Tesla, but I don't have an exact date yet. They will make their announcement. We can't announce it," end quote. So contextually, that sounds pretty final. They're not talking about we expect an agreement or something like that. They're saying we expect an announcement and Tesla's got to announce it. So plenty of smoke here. What seems apparent at this point is that Tesla has at least looked at a variety of locations in Mexico. Beyond that, it's a little bit less clear, but it certainly sounds like things are pretty close. And it'll be interesting as we come up on Investor Day now in less than a month, if we'll have an announcement before that, or maybe Tesla saving it for that day. Speaking of the calendar, since we are now into February, we are starting to get reports of US auto sales for the month of January. Of course, Tesla only reports globally and quarterly, but many other automakers share US sales by month. So Automotive News putting together a nice recap of those releases. And it looks like January, starting off the year on a pretty decent note. Automotive News says that US light vehicle deliveries rose 4.5% in January to a seasonally adjusted annualized rate of 16.2 million, which would actually be the highest adjusted rate since May of 2021. So it's interesting to see that strength in the face of increasing interest rates, of course, and just a lot of conversation about weakness in the automotive market, increases in inventory, which I do think plays a big role in the relative strength that we see in this January number. But I think the larger question is about sustainability of that type of a number. How much of that is still catching up with pent-up demand from these supply chain constraints that the auto market has been experiencing? And what happens once that's all caught up? I mean, we could say the same thing about Tesla, where we had these really high prices and then, caught up. Now these price cuts come. So we may see something like that in terms of unit volume in the broader market if we don't see pricing more significantly adjusted going forward. Anyway, by automaker, we can see the year-over-year changes. For January, we don't want to overrate one individual month, but interesting to look at this. Of course, last year, January was very constrained, but most automakers up on this list. Honda actually up 14%. They have really been struggling, so a big change in direction for them. Hyundai Kia up 15%, Mazda also struggling, up 9%, Subaru about flat, and then Toyota, interestingly, the only one on this list that is down 15% from last year. Have to look at more context on that. Toyota may have had more inventory coming into that period last year where their base could be a little bit higher than others. And for some reason, Toyota is still in a relatively low inventory position. They say that, I believe these are North American numbers, they've got about 23 days of supply for the Toyota brand and 28 days of supply for Lexus. They didn't have the numbers for Ford in this table, I'm not sure why, but elsewhere in the article, they note that Ford was up about 2% in January. And kind of interesting context for Ford, if we look at their release, they note that they delivered 2,600 Mustang Mach-E, about 2,300 Ford Lightning F-150s. Finally then, on January sales, according to data from TrueCar, average selling prices did decline industry-wide to about $45,200 on average from $46,000 in December. Different data sources are going to have different numbers for those prices, but maybe some signs there in pricing of a little bit weaker demand as well. As for Ford's earnings, I mentioned we'd come back to those. Just want to take a quick look at some of the numbers they reported. They did report for the year a $2 billion net loss. That sounds pretty terrible, but like we have talked about with previous releases from Ford and Amazon as well, a lot of that attributed to the markdown from Rivian carrying a lower valuation. So that's $7.4 billion in loss reflected. But that was a $9.1 billion gain for them last year. So it's really just an accounting thing. That valuation, of course, is going to fluctuate. That does matter for Ford's business, but the underlying business matters more. So whether gain or loss on that, fair to exclude it. And then they also had a $2.8 billion markdown, impairment markdown from Argo AI, which we had previously talked about, Volkswagen and Ford winding that down. So $2 billion net loss, but adjusted earnings before interest and tax of $10.4 billion for the year. They say they anticipate for 2023 adjusted EBIT of 9 to 11 billion, so roughly flat, but the midpoint there would be down year over year. Now, to me, this does bring to mind that note from UBS that we had talked about. Remember, they said that they don't feel like automakers are willing to admit how this year is going to shake out yet. They've pretty much expected OEMs to guide around that flat-ish level, but they actually expect earnings this year to come in down 40% or so. A couple other interesting points in the shareholder letter from Ford. Jim Farley did note that, quote, "We should have done much better last year. We left about $2 billion in profits on the table that were within our control, and we're going to correct that with improved execution and performance," end quote. Not too often that you see such candor in these type of letters, so kudos to Ford for that. And then in a similar fashion, as we have talked about previously, additional transparency from Ford expected this year as they separate out their business units from an accounting perspective, which should give us a lot more visibility on how they are progressing with electric vehicles specifically, something that legacy OEMs have been very, very hesitant to share so far. They say that on March 23rd, they'll be holding a teach-in event to explain that new structure, so we'll keep an eye out for that. Next, we've got a couple of news items on GM. They have announced a partnership with Netflix to feature their electric vehicles in a number of Netflix shows. Had to kind of chuckle at some of the descriptions here. They highlight one called Unstable. They say, quote, "Enjoy this new comedy starring Rob Lowe and his son John Owen Lowe and the sleek and stylish Cadillac Lyriq," end quote. So we'll keep an eye out for that, I guess. And then Netflix has also announced that they will still include electric vehicles made by other automakers. So GM was not able to close an exclusive agreement on this deal. More importantly, but equally humorous, GM and Honda have announced that they will start producing a new hydrogen fuel cell system jointly developed by the two companies this year and gradually step up sales this decade. They say that they target 2,000 units in the middle of the decade, 60,000 units per year in 2030. Still pretty inconsequential, but scaling up to a few 100,000 per year in the later 2030s. Moving on from that, we've got a couple of updates on Chinese automakers. So one report of NIO price cuts on the ES6 and ES8 up to 100,000 RMB. That'd be nearly 15,000 US dollars. I want to hold off a little bit on that because we still have not had confirmation of this from NIO on their website. Kind of seems like this may be an in-store type of adjustment at the moment, so we'll keep an eye on that. And then BYD, we have continued to see selling from Berkshire Hathaway of BYD stock. A new filing today showed sales from last week. Again, a very small percentage, only about 0.1% of their holdings, but this has been pretty persistent. Bloomberg pointing out that they have now sold off $500 million of BYD stock. I think their position in BYD has gone from about 20% ownership now down to just under 13%. It'll be interesting to see how long that continues for. But that'll wrap it up for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. Also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Friday, February 3rd episode of Tesla Daily. Thank you.